Good morning, Predicted Trades family. Hope everyone had a great weekend. Hope we're ready for a fun week ahead. If we just zoom out and have a little bit of a review for the last couple of weeks, we kind of held this 39.41, had a nice run up to try to get to the 200, came back, and then we had Powell speak last week. And we also kind of topped out and came back off of the holiday week, the lower volume, right? And sometimes, a lot of times we cover the daily moving averages and where we are in relation to them. Because last week we talked about how, with the gap down from the light holiday week that sent us almost to the 200, wouldn't be surprised for a little reversion near the mean, and then an attempt to go higher and get that 200. We got that all in one day after Powell spoke, where we rocketed from 39.50 up to 40.80-ish, right, in one day. And then on Thursday, we held up in that range. On Friday, we went down on the jobs data, which looks like the jobs data was bad. It's actually not that bad. Might even say it was a little good, but they love to use things as an excuse. We also had NFP on Friday, and I talked about how it's very common on an NFP day for them to dump it if they really are trying to hold up a bull trend. We've seen it a lot this year. So we dumped. I said ultimately we need to hold that 40.20. We opened, I think, above it, right? Yep, opened above it and never even went back to test it, just took off. Where we hit some nice longs. I think a little bit of short back to the 200 and then long again to end the day. Coming into this morning, we were pulling right back to this 40.56 near that 200. The daily 8 has slowly crept up and is now right next to the 200. So we've got our daily 200, daily 8. We've got the bottom of a 2-hour squeeze. So we've got plenty of support right around this zone. Wouldn't be surprised today to take a dip into this zone just to give the look like things might be breaking down and establish a higher low from Friday. If we are going to have some upside this week to try to get up and take out 4,100 and move higher. As we've seen plenty of times where they like to dip it on a Monday and maybe even leave it down there for a while and then take it up later in the day as they've loaded up long. So, just talking about some possible scenarios today and this week if we are trying to head back up, get another test, and push higher. Would not be shocked for Monday to be a little stale, maybe come down and collect at this liquidity range between the daily 8, daily 200, and then start to ramp later in the day. We could also have a quick tap, maybe pop up into the middle of the range and mess around. But there's always the scenario that sellers try to step in. I mean, we could say they had their chance on Friday to step in, right? Had that negative reaction. Sellers could have easily stepped in and engulfed this rally up off of Powell and tried to push us under the mean. But sellers did not do that. They very quickly got back above the 200, and here we sit in between the 200 and the trend line from this year's highs, right? We tapped it on Thursday, and we tried to fight back on Friday. Now we're just consolidating in what we could call a bull flag, right? So same levels still apply as what we covered last week and on Friday. That 40-20 is key. This daily 15 slowly catching up to it. Let's see if we can hold our daily 8, daily 200, start to fight back over 4060, get back to the middle of this range, 4056, 71, 87, and we can see our pre-market highs are right at that middle of the range. So we fought back, closed near it, now we're just sliding back to where we were consolidating before pushing there. Let's see if they want to give it a little dip just to get some bears all loading up. And let's see if we can hold our 2-hour squeeze bottom. Before I get going too far, let me pull up our economic calendar. So, as you can see, the big major one, all week, we have no Fed speakers. That's a pretty awesome scenario to be in, especially after such a interesting rally up and hold in a bull flag. And we are pretty light on economic data this week. We've got a little bit of PMI today, that 9:45, 10 a.m., so we could expect maybe a little chop in that first, and wedging in that first half hour to an hour. But, PMI can definitely give us a nudge. I'd say the other two, usually don't carry a ton of weight. But, that's kind of how each one this week is, in my opinion. A little light until we get to Thursday, Friday. But we've got some PMI, some manufacturing data today, a little bit of trade deficit tomorrow, some productivity labor data on Wednesday, some consumer credit coming out at 3, and then Thursday initial jobless claims as always, and Friday some producer price index and University of Michigan. So kind of that 8:30 reaction, and then 10 a.m. second data drop scenario on Friday. Looking into next week, Wednesday is going to be the big one with Powell at 2:30, and we have some CPI. We got that 1-2 punch next week. So next week, definitely a lot more economic data coming out. Today, this week being light, maybe they try to rally up a little bit more into, some numbers that could potentially look worse. But they could always look better. And, we'll step out to a daily time frame here in a second. Another thing I'll just note with our with this chart I like to use for moving averages from a bunch of different time frames, right? The 45 EMA that I like to teach is kind of for me, the line in the sand, the change of trend marker. Whenever we break through the 45 MA and we are rejecting it, then we have changed trend. If we look at last week, the week prior, Thanksgiving holiday week, we were above all of our MAs. Then coming into last week, Monday, we dropped below them. So that's why, at least going into Monday's prep, I said we could likely test these MAs and then roll over back to daily moving averages. That's exactly what we got. We rejected for 2 days under these 45 MAs. And then Wednesday we broke above, and as you can see, Thursday, Friday, Thursday we held up in our 15 and 30 minute. Friday, that data drop took us right to the 4-hour and then right back up. So this is a bullish bounce off of MAs from different time frames. And coming into today, it's looking very similar, where we are trying to hold up. We have our 4-hour just below. It is at 40.30. So when I talk about maybe taking a dip today and holding up a higher low, we could get down to that 4 hour. But let's see if our higher low could just establish, pretty much, I'd say the low from Monday. The low from Friday, sorry. Anyway, overall 40-20 big key. Let's see if we can hold up at this 40-37, the daily 8, start to make our way up today. And I would think if we do slip down here in the morning or even midday, then we'd see a lot of our calls returning to beasts. So one thing to keep an eye on. Let's go to NQ. Well, darn it, I did say, let's check out the daily time frame real quick. Ooh, nice. We got some speed on the load today. I like it. Let's clear this up. Just to show, we're coming up to this trend line from the highs of year. We did pretty much give it a tap on, what was it, Wednesday, or Thursday, sorry. Thursday. If we do start to get through the recent high that we did reject on the last attempt to get there, is around that 4175-ish, 4180. That's not too far from where our daily third daily Keltner is to the upside. So we are a little extended, at least from the daily Keltner viewpoint. But as you can see, we can get to third Keltner and just keep riding third Keltner down. So that third Keltner sits up near that 4200. Obviously, we need to get up through 4100. And another thing to note, last time we tested the daily 200 in this trend line was off of that June-July rally. And as you can see, we, looking at the structure of that June-July rally, we started to get up to our moving averages, and then it was basically just a straight beeline up to where those were at the third Keltner. Very strong drive, gave it very little pullback, just tiny consolidation flags, and then higher. At least this attempt to try to get through the daily 200 and this trend line, we've had some healthy pullbacks a couple of times. There's been plenty of rotation on this ride up. We had one kind of balance area down here that we broke out of, retested, and went higher, settling into a new balance area that we're starting to break out of. And this time we did get through the daily 200 and is now providing support. So just covering all that to say this time it looks a little different. It's not so directional just to reject right back down. If we do, let's say, ultimately roll over, get some bit of bad news or whatever that starts to send us back into a downtrend, because we are in a steady uptrend, it could lead to a longer, less extreme H if we were to get back down to lows. Just talking about the energy, we run too hard into the key things we should reject, we run right back down it just as hard. But we've made a nice slow rotational grind up here. Some things are extended, like finance, BA, CAT, they were a little extended, but they've had some pullbacks now. And tech was a little underperforming, and now they're starting to catch up. So we're at a good rotational spot where we could actually start to get this breakout with the targets of those recent highs at 4,200 and the last time we rejected around 4,300. Those are kind of going to mark. If this can be a true breakout, obviously just getting above this trend line, holding it, and starting to push higher is going to definitely wake up some buyers and some potential risk on going into the end of the year. or in the last month. The next 2 weeks are I think the last two full weeks, right? We'll have a full week this week and next. Okay, we have holidays over the weekend, so maybe we do have a full week. Interesting. Plenty of time in December. I'll double check the holiday schedule. Sorry, I don't have it up at the moment or memorized. But overall, could lead to an interesting December where we actually do start to recover so that this year's candle is not maybe so dramatic. There's also the scenario, as always, of consolidation, where we could maybe get through, start to hit some exhaustion, get people trapped higher, come back, consolidate, dragging our MAs back up to be truly bullish. Normally when we talk about a Santa rally or a end of year rally or whatever you want to call it, in the past, we've usually been in an easily marked bullish sentiment where your daily 21, daily 50 are well above your 200, and we just keep trudging higher off of those MAs. This year, obviously, a little different. Now all of our MAs are below our 200. So, in a normal healthy move, whenever we get below the 200, to continue higher, excuse me for a second. To continue higher, we usually start to push over the daily 200, dragging our MAs up. As they start to cross, we'll pull back and try to push off of them. Ultimately, it's a process to get back into a full bullish sentiment where a lot of buyers step in. So we're going to see those breaks and fallbacks and breaks and fallbacks. So let's see what we end up getting. And let's just keep in mind, going back to a lower time frame, last week's range is now a little wide, right? From about 39.40 on Tuesday, Wednesday. Yep, 39.41-ish. All the way back up to 4,100. Just another reason why we could see some consolidation. We have a wide range from last week, but if you look at the weekly candle, it's a large wick. Where did we open? Right around 4,000. So a large wick down, and then a big body up, closing near the highs. So just keep in mind last week's range, and keep in mind where we held after the jobs data. That should now be the floor on anything that you're looking at, ticker-wise, to keep heading higher. But let me start trudging through names because we are getting a little late. On to NQ. So did a great job staying above the daily 15, daily 8. Now as we come back pre-market, basically today looking for us to hold around 875, 870 where this daily 8 is. But we are pulling on up to this higher squeeze right above that psych level 11,900. So let's see if we can hold there above these moving averages and try to push higher. If we start to give out that 900, definitely coming back to test these. Should they give out, we have the daily 21 below. But if we can hold 900, start to push back through, pre-market high around 12,000, then it's the goal to get back to the top of last week's range at that 12,100, with the goal of pushing higher up to that 250 in the top of this 2-day squeeze. So ready. Its ultimate goal is to try to get over 1900 right now. It did a great job, well, I guess on Friday got all the way back to the 21 and has pulled back up. Ultimately right now I'd like to see Ready hold at this daily 8. It's pretty much where we were pulling down and finding support before the data drop, and then we got right back above. So kind of a little bit of a neckline for an inverse head and shoulders. That's definitely where I want to see us hold, is about that 75, 73, if we do have a dip today and start to lose this hourly squeeze bottom. But if we can hold up at that hourly squeeze bottom or at that neckline, looking for ready to get back up to 1900. Ultimate goal, trying to push past 1900 up to 1920, 1940. YM. YM holding up a little better, obviously, than the Ready. Didn't get back to the 21, held that daily 15 and that 34,000. So just like 4020 on ES, this is where we definitely want to hold up if we do slip down today, so that we don't give that look of going back to the daily 21. If we were to give up that 34,000, that's kind of what you would be targeting. We do have some of these highs from pre-market just a hair below, and that's also where kind of Friday's lows were. So ultimately, looking for that to hold. Should something like that give out and YM start coming back to the mean to engulf, then we're maybe looking at losing stuff like 4020, 4,000, that kind of thing. So let's see today if we can hold up at this 2-hour squeeze bottom and this daily 8, kind of all around 34,200. If we can hold, start to work our way back to 400, 500, with the goal of getting up to 700 and beyond. 35,000, the big key target if it actually can keep moving to the upside. And that third Keltner still further up above 35,000, so we do have room to try to keep moving. We got back up above our moving averages, pulled back and tested them. Well, looks like we're testing them again. Let's see if the buyers step in this week. And don't be surprised if today they let it sit, maybe slip a little. You know, like I said, we could have a slow Monday while they try to pick up contracts if we are going to go up this week. Moving on to Apple. Apple getting hung up at these key levels, slipped them for a second to tap our zone and the daily 50, now back up at these key levels. So again, kind of that inverse head and shoulders. Looking for us to try to hold up. We have the daily 21 at this 147, key level at 147.5, so looking for that to be our support. And if we can hold there, we really need Apple to try to push up through 148, get back to 149, 150, and try to push higher back to its daily 200, which now sits at our zone up above. If we start to lose that daily 21, if you look at this, I'm assuming 2-hour squeeze, we have the daily 50 again at the bottom. So if we are going to see some consolidation or pullback today, Apple might come down to get stuck between that daily 21 and daily 50 and test the bottom of this 2-hour squeeze, set a higher low, ramp up, end of day kind of thing. Just some possible scenarios. But it looks like it's trying to kind of hold its overnight low. Looks like it maybe wicked a new pre-market low. So 147, 147.5, see if it can hold. If we start to give out, then it could be a slip back to 146. AMD. Let's see, pulled back to its daily 8 and daily 15. Basically just looking for Friday's lows and this 74 to hold. If we can hold there, trying to work our way back to 75, 76, 77. We start to lose that 74, coming back to this 72 and that daily 21, which is likely going to be right at that 72. So 72, 72.3, which we didn't even get down to test last week. So obviously getting down there going to be, potentially making that H, getting some bears loading in, but ultimately, let's see if we can hold Friday's lows. This 74, start to work our way back up. Amazon. You know, a little weaker on Friday. Not too far from kind of these highs before breaking out with the PAL. So let's see if it's trying to make a trip back to this 93, this daily Keltner, and Friday's lows for a test, kind of on that trajectory. But looking for Amazon to hold up right around that 93, try to work its way back up to 94, 95, with the goal of getting back to this 97 and the daily 21. If we start to lose that 93, then likely going to go test last week's lows and this base that it's been setting in around 91. You know, kind of like if they have all month for a rally and Amazon's chart looks like this, maybe they want to come back and set a big sloppy W before heading higher. But, you know, she's going to help us this week. Let's see if she can hold 93 and start to work her way back up. You know, to stop looking like popping with the market and then slowly grinding back. BA. Big move on Friday. Didn't get to the mean, held the bottom of our squeeze and our trend line at that 173. I can remember distinctly on Friday I said with it coming down like this pre-market, if it holds 173, it can make a great recovery back to 180. That's exactly what she did. So it pays to listen and prep. Today, I want to see it hold above 180. It was resistance, broke through. Now it needs to be the support. Trying to settle around this 181, 181 and a half. Ultimate floor. Today I want to see hold as 180. Otherwise, could engulf back through this thin structure where sell orders were. But if we can hold above 180, let's see if I can keep pumping up to 185, 187, where the third Keltner sits, with the goal of trying to get to this zone above at 190. Giving out 180 could bring us back to that daily 8, which would still be fine and healthy and set a higher low. Higher low. Alright, moving on to CAT. Making some interesting moves, definitely, in this stacked up lower time frame squeeze, right? Getting down to 230, 231, it rallies right back up to 237 repeatedly. So you can guess where your floor is right now and where all these stacked squeeze bottoms are at. Let's see today if we can hold 233, 232, and obviously where that floor is at 231. Try to work its way back through 235 to push up to the top of last week's range. Ultimate goal getting back to this 240 and trying to push beyond to this 246. Google. Closed above 100 and open below and very close to this 98.78. So let's see if it wants to take one last dip there at these squeeze bottoms and that daily 8. We have a number of things stacked up. Daily 8, key level, squeeze bottoms. When we get there, I'm definitely going to take a shot long for the support. Obviously, if we break through and reject, then support has given out and it can lend to a harder drop back to the next targets and Friday's low. But if we can ultimately hold up this 98.75, just call it 98.50 to 99 today, looking for Google to get back above 100, 101, ultimately this 103, and this daily squeeze, 2-day squeeze top back at 106. Next big target past that would be 107.5, but obviously we need to get above 100, take out last week's high for any attempt to get up to these levels. And we have all of our moving averages below. Even pulling back to 97 to hit that daily 50 and 21, that's just a hair below Friday's lows and right where we broke out from on Powell's speech. So it would still technically be okay in setting a higher low off of the top of last week's, beginning range. GS. Has basically made it back to where we were before that run up on Powell. So at an interesting decision point. Yeah, 370s. Yeah. So has to hold at 375. Otherwise, we might be talking about a larger breakdown. Back to that 21 or this Keltner below. So let's see if it wants to, or GS wants to slip down to that 375, kind of set in a double bottom here, and start to work back up. If we can get through 380, 382, it might start to accelerate up to last week's highs. Around this 387, 388, let's just call it. Moving on, let's get to Meta. Made it back to this 123. Talked about that last week with this push up from that help on Wednesday. Right to 118. Ultimate goal was to get to 123 as long as it could hold above 115, 116. And push off that 118, it could get back to that 123. It looks like we made it. We do have some room to go to the upside to get to that third Keltner at 128 and that psych level 130. But if we start to give out, call it 121, 120, where that daily 50 sits, then we might see Meta roll back to retest Friday's lows in that daily 8. Microsoft. Well, as you can see, 254, 255, kind of the resistance right now. But we fought back to it on Friday, and we're only gapping down a little bit. If we start to lose pre-market low, we could go quickly to retest 252, 250 at the bottom of the squeeze. Obviously want to see us hold up there for a recovery late day and moving to a move up this week. But if she holds early at pre-market lows, and just call it 253-ish, and starts to come back to fill the gap, looking for it to get above 255, 256, with the goal of pushing up to 260, where this 2-day squeeze sits, and the daily 200 up by 265, right near our next key level, 266. Netflix. Netflix made a great move last week. On Wednesday, shot right to our key level, consolidated, and then just took off for more each day. The 320 call last week with our beast system was perfect. It hit, even with this move up on Thursdays with the little gap down, it slapped our beast buy levels and took off for like, what was it? I think a 10x each day. I think this day it was 50 cents to $5, and then this day it was, since we had another gap down, it was, I want to say 40 cents to $4, something like that. But great move on Netflix off of our beast tool on those 320s last week. This week, kind of like last week, every day we would shoot up and start to flag, shoot up and start to flag. And we set in some support around this 314. Now we have our 2-hour squeeze there, and 315. So looking for those to hold today for us to continue this rally up. The ultimate goal is to get back to 333. I don't have it marked, but used to have on a gap fill. I have it marked. But basically 333 is previous gap down on earnings, that getting up to 333 would be filling that. So that's the ultimate target today. And if it were to fill and give a little look higher, this 340. But Netflix definitely on watch this week. If it starts to give out this 315, it could just have a dip right back to Friday's lows near this 310 and our key level at 307. But definitely going to keep an eye on Netflix this week. Found its support, made the move up, getting ready to finish filling that gap and close enough to make it this week. NVIDIA, and a great flag. Want to see this 163, 164 hold up Friday's lows, bottom of the squeeze this week to start heading higher back to 170, 173 at the top of the squeeze with the goal of getting back to this daily 200 up at 177, 178 and a quarter, that third Keltner, psych level 180. You know, we start talking about, can this rally start to break through? We've got ES above its daily 200. We need to get some of these tech names to start getting above their daily 200, start dragging their MAs up to meet on QQQ. So, coming down close to 290. And we have some squeeze bottoms there, so let's see if 290 can hold us today. Kind of give us that bullish look of a, decent higher low. And if we can hold 290 and don't have to retest the daily 8 today, would also lend to some extra, a little bit of bullish sentiment this week. But either way, looking for a 290 to try to hold. If that gives out, coming back to that 288, 288.5-ish at the bottom of this 2-hour squeeze. That daily 8 will be sitting, still setting a higher low. Ultimately looking for all that to hold and push us back through our pre-market highs near 292.5-ish. If we can start to get through that, 294, 295, last week's highs pretty much around 295, with the goal of getting back to 300 at the top of this 2-day squeeze that looks like it's trying to fire. Ultimate goal trying to get back to that daily 200 up at 305. SPX. Gap fills, gap fills. Talk about it all the time. We have filled a gap. We held that gap. We opened on Friday, went down, tapped that gap with the daily 8. Love it when things line up. That's where we were going long. And she took off above that daily 200. So just like ES pulling down near the daily 200, let's see. We're going to be gapping down about 27. So we'll be a hair up. Yeah, we'll be near this squeeze bottom, near that daily 200. So let's see if we can hold around there, start to work our way back up to fill the gap. On Friday, we worked our way back up and we filled the gap and then consolidated. Now we're gapping down. Let's see if we can get a repeat of Friday, hold for a higher low, and come back to fill the gap, which sets up bullish into the week, where we could get a gap up into Tuesday, right? We've seen this many times. If we do start to lose that squeeze bottom, that 200, we do have the daily 8 and Friday's lows and this gap that we did fill as our saving grace, so it could be a slow grind, looking like we're bouncing, give out a little more, retest that low, and then get that into day ramp. A couple of scenarios, we just got to keep in the back of our mind to be ready, since we are in a nice downtrend and we're slipping a little bit more going into open. So don't fight that trend and just start going long. Let us hit something key that I'm saying, want to see this hold, want to see that hold. If it gives out last saving grace. But if we can start to bounce, work our way back up, looking to, just like we did on Friday, get back up to this 4070, 4080, and then start to push back to this 4100. Ultimate goal, trying to get up to that 4150 maybe this week. SPY. Same deal. Near some squeeze bottoms, daily 8, daily 200. Want to see us try to hold, basically above that 402 and 404. And last saving grace, obviously, that 401 in Friday's low. If we can start to hold there, work back up to 405, get through it, back to 408, 410, with the ultimate goal of trying to push up to 40.15 and 40.20. Those are the big key targets to the upside. 40.20, kind of the next big high volume node on a daily volume profile. And getting through 390 was kind of the last big volume node. So if we're going to make our way to the next one, it would be about that 40.20. Obviously, we've got 410, 415 to contend with. Moving on, Tesla. $190 going to be very key, going to be a tough battle there. As you can see, we tried to hold that last week and consolidating this flag, gapping down. Now we were resisting it pre-market, so keep an eye. We do have the daily 8 around that 188-ish. We have the daily 15, kind of where we bounced pre-market. So as long as we're holding above pre-market lows and that 188, good zone of support, where Tesla could slip, consolidate, and then start to ramp back up. If we can get through 191, work our way back to 195, looking to get to 200, and then to our next zones above 206, 210 potentially this week. But obviously, got to take out 200. If we start to lose pre-market low, back to 180, and last week's lows, which still, wouldn't be too bad. But obviously, Tesla has just made it back to the mean and then consolidating at these moving averages. So definitely not the strongest name, but it does have some ground to recover since it's been weak lately. And, they might be seeing these higher lows as a good sign to start loading into Tesla and get it back over 200. UVXY. Steady downtrend, right? And we would want to try to mark that, because getting over that downtrend line would mark a change in sentiment. So, as long as we can stay below this trend line and kind of ride this channel down, looking for UVXY to stay below 7.5, as long as we can reject there and start to roll back over below this pre-market action. Still looking good and bullish, with the ultimate goal of getting back down to 7 and below. But if we start to get through 7.5, coming back to the daily 8 for a test, recent highs around that 775 and that psych level of 8 where we consolidated for a while. If we're, if we get that scenario, we're rolling over on the market. On VIX, made it down to 19, even printed a little bit low on Friday. Now gapping right back up and holding above 20. So for further downside today, we'll likely see VIX hold above 20, start to push through pre-market highs, and get up to this 20.5, 20.7, maybe even 21, kind of Friday's highs pre-market. If we're going to see some downside or maybe a slip down and consolidate, we'll probably come up and test this daily 21. Maybe never even, we might not even make it to 21 today. We might just get to this daily 8, start to reject, and then roll back. But ultimately, if we can get back below 20, it's a good sign for us recovering this gap down, potentially. So I want to see us, get below 20, start to head back, down to 19. Ultimate goal right now, trying to get to 18.5, 18, which is the next big key level below 20. If we talk about the market maybe giving a pop through the trend line of highs, just a look above and then falling back, wouldn't be surprised to see VIX get to 18, consolidate, and then we have a pullback. As we approach 20 and 18, we want to take note, is VIX gapping up? And gapping up, meaning are they maybe buying into low VIX new shorts for a new rollover? So there are some signs out there of, some defensive moves that we need to keep in mind. Definitely don't love, as we're trying to push higher, that we keep getting gap downs and VIX gapping up. Starts to look like, are they getting defensive again? Which we should always think about, from this year's history. Anytime we get near 20, or these low 20s, that's where we turned around and go right back up on VIX and right back down on the market. But, it is also a process to get below 20 and try to stay below 20 in a rally, where we'll take peaks below 20, pop up, and then keep setting these lower lows. So let's see if VIX can reject and stay below 20.7, this daily 8, and start to work its way back to 19 and 18 this week. So that's it for prep. Sorry we ran a little late. Good luck today, everybody, and I'll hop right over to the chat.